I'd like to welcome everyone to today's edition of the Software Spotlight. And joining me today is Adrian Mendoza of the Mendoza Ventures. We're actually recording live from his office right here in Boston on Newbury Street. And this is a lot of fun. So I'd like to welcome you to the podcast.
Michael, well, thanks for having me, and it's great to have you in the heart of Boston here on Newbury Street. And I realized you were Boston based, and said, "Why don't you come to the office and we'll do it in person?"
Absolutely, makes a lot of sense, and probably a great way as we're just past 100 episodes to do something a little bit different and shake it up a little bit. So
I
I
love
think
it.
that's great. So I was really hoping you could give the listeners a little bit of your backstory. I know you've had a lot of different experiences, founding some of your own startups over the years, and I know you also worked over at Walt Disney with their Imagineering and IBM and Fidelity and a lot of other exciting areas. But tell us a little bit about how you got to where you are today.
Yeah, it's a good question because in a prior conversation we were talking about the magic number of 1998, the year you
Yes,
founded Software Oasis, and the
absolutely.
year that I actually came to Boston. And so I'm an Angelino. I came to Boston in 1998 to do grad school at Harvard, and I stayed right at the beginning of the tech ecosystem here. One of the things that very few people know that I do a lot of education on is how robust the software tech ecosystem was here. And it really started in the late to mid, sort of 90s with advent of companies like digital, advent of companies um, like that were based at building mainframes and business to business
Oh,
computing
we had
out one
Raytheon and Prime and
Raytheon,
so many other
yeah, on
organizations.
128.
Yeah.
And funny enough, when I raised money in my startup, we'll get to that later, it was on Route 128. And there was this legacy of this culture and investors because it was the money that was made in these companies in the early to mid 90s that ended up going back to Silicon Valley to start, the browser wars and the investments there that feeded the funds and the software companies that were part of the dot-com boom. And interestingly enough, those companies and those founders, I mean, that's the capital that started the North Bridges, the Charles River Ventures, the Atlases, that were some of the first venture funds of this country that were based here in the Northeast. So came in 98, while I was in grad school and worked on, half MBA program, half design school, I did a lot of work for consulting companies, the Razorfishes that had just come to the Northeast, the Sapiens, and a lot of it was on getting the first brands into software. So post graduation in 2000, I got recruited to IBM's Innovation Lab. And that was actually something where they were starting to work with the first brands. So a lot of my experience early on came working with these early e-commerce brands, financial services, getting to know these spaces really well. And that was the experience I took to starting my first startup in 2009, 2010.
And it's so interesting because, and I know we shared some other common experiences. I obviously am from this general Boston area. I went to school at Babson, went through their whole entrepreneurship program, and very early on, we understand that we have a mutual contact, Les Charm, who was very involved in
Who was
a
just
lot.
here 15 minutes ago.
I love it. He's very involved in the Babson community, and
Well,
he was actually sponsoring one of the business plan competitions that I was involved in when I was there. But the interesting thing, you mentioned 1998, which is when I started Software Oasis, and it's interesting in that if you look at that time, it was a time when a lot of these larger, I'll call them old school tech companies that were manufacturing the hardware that powered a lot of the early innovation. And a lot of those companies, I think most of the companies you mentioned, other than Raytheon and some of the other companies, I mean, DEC and Prime and Wang and all these companies, are no longer, but a lot of the foundation in terms of the tech and the people that powered where we are today came from a lot of those organizations, and it's exciting. Really, a lot of tech here on the East Coast in the Boston area, a lot of tech in Silicon Valley, obviously. But one story I haven't shared: Software Oasis started as one of the first sites on the internet where businesses could actually go to both download software and license it for their organization. And that was, at that time, if you remember, everything was a floppy disk or a CD, and you inserted it to your computer. So this whole concept of a digital download was very new and very different.
You know, Michael, you were a revolutionary because people forget that in 1998 and 2000, software was still being sold. You know, it wasn't even common on a CD it wasn't even on a DVD yet. It was on a CD or it
Yeah.
was on floppy disk. And I'm talking not
Many floppy disks.
many floppy
Yeah,
disks.
yeah.
And I'm not talking the software that you buy in the store. I'm talking Photoshop, Illustrator, the Adobe Suite was
Right.
sold in a box or mailed to you in 10 to 14 floppy disks.
And,
And one of the stories that I had that you and I talked about is post sort of B school, I worked with a team that was in the PDA business. And this is, you know, the Palm Pilot, this is Handspring, this is old school that was being done. And we ended up, you know, so post IBM's Innovation Lab, I had a small agency that was working with software brands and a lot of it in the mobility space. And it was interesting enough because these were download driven, but it was still being sold to the consumer in boxes of software on CDs that you would buy at Office Max and Staples. And then you would download it and it would actually like just download it from the internet, but people still wanted a CD. And the concept of software being downloaded, I mean, this is fairly new because, you know, to as a good anecdote to, you know, in middle of like 2000, 2003, 2004, companies in the desktop publishing space that were selling to brands and to enterprises, you know, they may have given you a CD, but then they would give you a dongle because they were worried about software having multi installs being copied. And so as you're going through, enterprises had to deal with, I'll use a good example. I taught desktop publishing at Suffolk University in 2003, 2004, and they would be like, here's your dongle. And
right,
you now had
for
a bag full of dongles, and then we'd
for
have to
licensing.
plug them in for licensing.
Yeah.
And so thank God that downloading software is common now because it took so much garbage. This is why when you look at like RSA, you know, encrypted access, you had an RSA key.
And
That
it's so interesting because, to that point, one of the biggest challenges that a lot of the businesses had getting their heads around the whole concept of downloading software was, what do I do if I lose that file or I need to recover? And it was such a paradigm shift in the way software was delivered that we actually made an offering at checkout. You could actually order a CD-ROM with a backup of your software, and that alleviated that whole question mark for a lot of the organizations. And the funny thing is, most companies never ordered a CD-ROM, but
absolutely.
it made them comfortable to go through with the transaction.
Yeah. At that point, like at our small agency in the mid 2000s, we would have the buyers of Office Max and Staples come into our office looking at the disc. We'd have to mock up boxes. We'd have to do all of this work just to keep people comfortable with the idea that you could own a piece of software.
Sure.
I'm kind of happy that those days are gone. And let's
Yeah,
talk more about like
it's absolutely
selling software.
no, it's absolutely amazing. And one of the things, and in terms of trajectories, what's transitioned and where we are today. I was joking around with you, but you can think of Software Oasis today as kind of like the Angie's List of consulting. And really, what we're doing is we're helping small to mid-sized businesses connect with small to mid-sized tech consulting firms that are based here in the US and providing the best of solutions in a whole range of different areas. But one of the things that we found, and what brought us to where we are, is a lot of the organizations were pretty much getting to the point where, and this was as SaaS came out, where they were saying, hey, we don't need more software. What we really need are solutions to a lot of the challenges that we have in our organization, whether it's integration or automation or getting rid of redundancies or, getting things orchestrated so everything is talking to one another. And that's really where the consulting community came from. And now on the platform today, it's an opportunity for organizations to find the best of the best in each of the different areas of consulting that they might need as they're growing their organizations. So,
You know what? Talking about, we talk a lot about the paradigm shift of moving from hard disk to software and download. Same time when I first raised money on my first venture-backed startup, there was this is 2009, 2010, there was very much this idea that expertise had to be in-house, that you had to hire a CFO, a CISO, that you had to hire engineers, that you had to have everything. As soon as you closed your first round of financing, you had to bring it all in-house, and you got rid of the consultants and you got rid of the outsource. And interesting enough, there has been a paradigm shift that I witnessed as going from founder to investor. Now, as an investor, we coach a lot of our early stage companies to not bring it in house, to actually bring in consultants, bring in domain experts, fractional CFOs, fractional CISOs, fractional advisors, because you don't want to spend on full time bodies yet.
no, and the bottom line is, and I think we're all guilty of this as entrepreneurs. When you're founding a company, you feel like you need to be involved in everything. You need to do everything. And the reality of it is, and what I like to do is I like to look at the experience of the consumer, whether it's a business or an individual using your product or service. And, I like to work backwards and say, what is that experience? What is it that the consumer is actually purchasing and how is it delivered? Is it a software solution? If at the end of the day, all of their needs are met and they're satisfied and they're happy, do they care what happened behind the scenes? Probably not. So the reality of it is, whatever you need to get in place to deliver the right level of service or product offering is what you need to do. And I think one thing that really stands out for me, and I think we spoke about it before, is a lot of organizations have just that feeling that, if it's not somebody physically in our facility or physically as an employee in our organization, it's somehow less than, figuring out who the best experts are. You can't have the best expert in every area as you're starting up an organization. So figuring out what it is that you do in your organization that no one else can do and doing it, and figuring out what areas you have shortfalls or you need some help or you have the opportunity to bring in domain experts and hire them, whether it's, fractionally or more of an outsourced role or position. And I think that makes a lot of sense.
Well, I think it's our advice to a lot of founders is learn enough to be dangerous. But when you look at a founding team now as an investor, then a founder, we look at how do you surround yourselves with the best talent? Because, and then, yeah, there will one day be a transition plan of how do you bring this person in full time at the right time. But early on, the talent that you bring in at 3 people is not going to be the talent that you need at 200. And the more that you have that flexibility of, think of it as like, as a founder, you need to be a good coach. You need to be a good coach. We're the GMs of the team, the good sort of Boston Red Sox analogy.
Right.
The GM is there to help finances, to help bring in the talent and bring, and find the resources. As a coach, you need to be able to know who you're playing, and that team is going to be different whether you're in the postseason or the regular season, or if things are going well or things are not going well. And the more that you bring in a more flexible crew because truth being, especially in, a market that's capital constricted, you're looking at being as sort of fruitful with your dollars as possible. And now as an investors, we're pushing them to be like, how do you get to profitability and how do you get rid of the costs that you don't need if you're just starting out? But also when you get to scale, how do you then scale yourself up as fast as possible?
Yeah, and a lot of areas. I mean, if you're going through PCI compliance or ISO or KYC, or maybe you're working on cybersecurity insurance for your organization. As an owner, a first time startup, a first time founder, or even a more experienced second or third time entrepreneur, I think a lot of these skills that you may or may not have can be outsourced to a consultant that has domain experience in those areas and kind of can guide you through the pitfalls and what to look out for. And it's a lot of these things are not just checking off the boxes, but it's getting compliant and staying compliant, because
Yeah.
some of the the downsides to getting some of these things wrong are tremendous.
I mean, you bring up a good example. I'll use a good story like SOC 2. Founder is going to automatically get it on the first try. And we actually recommend bringing in consultants that can help, that have done it hundreds to thousands of times before, because part of it is, this, if you haven't gone through a SOC 2, it's not a traditional audit. It really looks at what are processes in place. And they're not just like setting the processes in place of how you handle the dollars of the firm, of the startup, but it's how code is deployed. What are security procedures for that code? How does it go from production to staging to development? What are processes in place for employees and onboarding? And not only that, it's about maintaining compliance, because the reason you're going through a SOC 2 is because you're selling your software to a financial, institution. You're selling it to a commercial brand, and on a constant basis, you're going to want to make sure that you're in compliance for them, especially when you're touching their data. And heaven forbid that you're touching PII, then you really have to be in compliance with your processes, because the worst thing that happens is you fall out of compliance, you get hacked, and now you're paying the consequences. You and I were talking about the level of now what's changed in areas like cybersecurity is that cybersecurity is now, when an event happens, but also procedures that in place, it's now being talked about at the board level. And it's different now, all of 5 years, where there haven't been a lot of events. Now it's happening more commonly. Now board directors are talking about what policies do we have in place. And that's an interesting connection, because the work that's happening at, the SOC 2 audit is now things that are influencing policy and software on the board conversation, because heaven forbid, that an event happens, whether it be a hack or an attack. But board members are not indemnified to the losses that have happened because of that. So now it's happening, and I've been on multiple boards where a board independent or a board member says, walk me through to the founder and the CEO of an early stage startup. What procedures do we have in place? Do we have cybersecurity insurance? Do we have procedures in place? Like, can you share the results of the SOC compliance as well?
And a lot of it is not just filling out the application, going through the motions, but a lot of it is making sure that you are indeed compliant and staying compliant, and doing the continual audits. Because I think a lot of organizations at one point or another find out that they need to check this box, and they go down that road and they try to just check the box. But when they get into it, they realize that it's really for their own good, in terms of staying compliant, and getting all of these processes and procedures in place. So I want to take a step back, because you mentioned your first startup. Can you talk a little bit more about the startup and the exit, and what that was?
Yeah, so our first company was selling something geeky, mobile performance monitoring. And if you think about it, this is like 2009, 2010. One nice thing is having been in the mobility space, there was a lot of conversations in the early 2000s about having brand presence because this was, in the mid to late 90s, there was a gold rush of brands now running in to say, I've got to have a presence on the internet. I've got to have an online presence. And so when you look at even the early 2000s, there was another platform. There were personal desktop assistants, PDAs, handsprings, Palm. There was a conversation for brands of, I need to have a presence there.
And not a lot of standards at that
And not a
time.
lot of
Yeah,
standards at all.
yeah,
And so when you look at the advent of 2007, 2008, when we started that company, we were getting approached at events. The person from Nokia would run over and hand me an $800 Nokia phone and said, can you develop on our platform? The guy from Windows Phone at Microsoft would see that. They'd run over and say, here is our Windows Phone, our fancy Windows Phone. So we'd end up having like a bank of phones. And so a lot of that genesis of that company was, all right, you now have iPhones, Android phones. You now have, 3G connections that are fairly faster than most dial-up modems, where you're
sure.
now checking, e-commerce and you're now buying online. And one of the exercises we first did, which connects to my background in user experience and experience design, is we were at an event with some potential end users and customers, and we asked them this idea. If your phone is slow, who do you blame? And at that year, this is 2008, 2009, the resounding feedback was, I don't blame my fancy iPhone. I don't blame my my all you can eat AT&T connection at that point. I blame the brand.
Right.
Obviously, the website is slow, and that's who I blame. And so we built a company that was going to brands and looking at how to improve the performance. And this really came from my background of being a consultant like those on your platform, where we were actually becoming the expert for brands on their web presence, on their mobility presence. Early on, yeah, I bootstrapped a company building an app for a financial institution that was super interesting. And it was the first fintech mobile app that got approved by FINRA, to the point that we had to send them a phone with the app on it because there was no way for them to understand how to download an
Right,
app.
right.
And so again, going back to the conversation on downloads, and it was like, here's a phone, go approve it, because this was new to look at mobile apps that were touching financial institutions and the financial life of an end customer. And so that company focused a lot on brands. And later in 2014, we pivoted into a mobile ad tech. And the reason there was, as we were working with brands and we were selling an analytics, they started digging in less to, great, this is what's happening, to more of, who's actually coming here. Because when you think about it, like, Google Analytics was fairly new for brands at that time. And so they were coming back to us and saying, well, who is coming from mobile devices? Are they coming from tablets? Are they coming from phones? What apps do they have downloaded? What's the profile of the customer? To then turning around and saying, well, how do we advertise back to them? If I know my customers look like, how do I personalize their experience to them? And so that was really interesting because it started touching into my background of having been a UI UX consultant. I ended up in 2013 writing one of the first books on mobile user experience. I'm still getting, sales as of now, even though it's
I
now
love it.
turned 10 years old.
I love
Um, Available still on Amazon, which I can't believe, and still being printed. Still get
And
royalties,
that was the experience you had
but
when you
that
were
was the
at
experience.
Imagineering and IBM and Fidelity and all of these different and with your early startup, a lot of the experience you had was UI UX.
And that actually, when you now look at when we started Mendoza Ventures in 2016, now going from founder to funder, a lot of my experience was, how do we take the experience of building tools and things for brands to that experience of bootstrapping the business, building, apps for financial services, to starting to look at, well, we were getting approached by everything and everyone. We were looking at everything from dog dating apps to compliance apps to everything under the sun, to let's actually invest in what we know. We had built
Sure.
cybersecurity, we had built AI systems before, pattern matching, we had built things for fintech. And that really came to the core competency of investing in spaces that we knew, investing in spaces where we can help, but also investing in spaces where we were domain experts. And we were domain experts that can help our portfolio and these founders with the shared experience
And
that we
really
had.
add a lot of value. And it's interesting you mentioned bootstrapping because I'm going to pull on that thread. When I launched Software Oasis back in '98, it was 100% bootstrapped because I was young and stupid, didn't know anything different, and the reality of it was I didn't have any money. So it needed to be. If $1,000 came in, $1,000 could go out, and that's all there was to it. But obviously, there comes a point in any venture where you hit a critical volume. Is What do you recommend, maybe to some founders who might be listening to this podcast? If they're bootstrapped versus considering taking on some funding, what should they be considering? Like, what are the
You,
thoughts there?
you know what interesting is, I'm a big believer of taking the business as far as you can without raising money.
Yeah,
Because the reality is, if you're, it's all about what's the cost of capital. And the cost gets better for you as a founder once you have customers, once you have revenue.
right.
Because for us, I think it's trying
Takes
to,
the risk out. I
it
mean,
takes,
yeah,
exactly, you're de-risking yourself. Because I remember first time I started pitching VCs as a founder, I remember being in a room with a fairly well-known investor, and he said, "Oh, I want to hear the pitch." And I said, "Oh, I'm not going to pitch you." And he was like, "What?" I said, "Yeah, I'll come back to you when I have a customer and when I have a prototype, but right now I'm just going to pitch you on an idea." And really, as an investor now, I tell founders, your first customer will tell you who you are. And sometimes it might take you as founder doing consulting projects, doing proof of concepts to get there. Because it's about, for us, when we were founders, we bootstrapped the business to try to pay for everything without raising money, because
right.
we were trying to get as far as we could without having to raising the capital. The entire goal of this was, I wanted to come back, and I did. I came back to investors with a proof of concept that we had, with a working product, that because we were building something fairly complex, and I wanted to make sure that it was working
Right.
and that I de-risked it as much as possible. And that's where I
You have
push
to
on a lot.
iterate. You have to get to
Exactly.
your final working model where that first customer wants to pay some money for whatever it is that you're offering,
Exactly.
and it's very different than a friend or a family or someone else saying that's a great idea versus having somebody actually put their
That's exactly it.
money on the line, and that's different. And you know, I'll be upfront. Every single first customer that we brought aboard, I signed up. And I think as an owner, you have to do that. You have to go through all of the steps and understand, what is it that makes things tick, and to do it on your own before you can expand out and scale up to have other
Well,
people doing all of these different things.
I think especially when you're dealing with software, selling software to enterprises is its own unique process. It's different with consumers because on the D2C side, the direct to consumer side, you're worried about, let me talk about CAC, let me talk about customer acquisition. How do I get marketing and PR involved? But when you look at selling B2B software, this is anywhere from a 1 month to a 2 year sales cycle.
Right.
I've had this exercise that I've talked to you before, that I talk to all of our founders, and it is called the 9 by 9 grid. One day I'm gonna have to give it a name.
This could be
Maybe
your
this could
second.
be,
This could be book number two.
this could be book number two. But that 9 to 9 grid starts with, you know, a first column that says, who, when looking at enterprise software, who are you selling to? The first one is going to be the end user. And so the first column, fill out who that person is and what their title is. The second one is who is the buyer, the person whose cost center is paying the check for you. Put it their name, put their column, put their role. The third one is who's the sponsor, who champions you into the enterprise and is going to be the person that pushes you through. So that's really important. And then the next column is why did they buy it? And one of the things I love about customers is when you ask them for advice, people will give you their advice. Customers love to talk, especially once you've
Sure.
closed them.
Sure.
And so we go to these founders and say, take the 9x9 grid and start asking them these questions. So that
Right.
second column is why they bought it. The third one is the one that I love, that is the most important thing. Ask them what words you use. What was the word? What was the phrase? What was the thing that made the user say yes, that made the sponsor say yes, and made the buyer say yes? So now you should be able to take this 9x9 grid and you should be able to replicate the sales cycle, finding the same people with the same titles in other enterprises, using these marketing terms and using the words that were successful to them. That's really what changes, because part of our goal as an investor now is, if you do get to $1 million in revenue, did you trip over it or was it repeatable?
Right. And
And
finding that compelling message that is so strong that you're not even really selling.
exactly,
It's something that the customer is buying because it's taking them forward and helping them achieve something that they couldn't achieve with whatever it is that you're offering.
absolutely.
So on your end, when you're speaking with founders, and I'm sure a day in your life you're probably working with a lot of different opportunities. What do you see as the main areas that you like to focus on with with Mendoza Ventures, in terms of the types of companies that are the best fit for what you're able to offer to help them get forward?
Yeah. I think the way I approach it now is to say, I invest companies that innovate, modernize, and disrupt. And a lot of these industries are going to be the ones that I had direct experience on: financial services, financial institutions, insurance, sometimes maybe manufacturing. And they coalesce as companies that are fintech, investments in fintech or cybersecurity or AI. Because even now, when you look at the banking space, the insurance space, manufacturing, when you look at all of these different spaces, there's still a massive opportunity to modernize these spaces. Because when you look at a lot of their systems, especially in the back office or the mid office, there's still a lot of opportunity to find companies that are filling these solutions. For me, I think the best founder, and this is what I recommend for these thematic spaces, is one that has had the experience working from the inside, finds a problem, and dreams of the solution to a problem that already exists. So much in enterprise software exists of people coming up with solutions and then trying to chase after the problem. And that's the dangerous founder, is the one who's building software and products and hasn't found anyone to buy it yet. People ask me, like, what do you look for? And we'll say, hey, yes, there's the team and there's a market and there's a product. For me, it's always about revenue. Are you closing revenue? Because if no one's buying it, you don't have a company, you don't have a product.
And it's interesting. On the podcast a few weeks ago, we had Stella Garber, who was on the founding team over at Trello. And Trello, obviously was just sold recently to Atlassian, I believe.
Atlassian,
Yeah.
yeah.
And she and a few of the other founders started a new solution, but she's also been working in venture capital. So, uh, do you find that you're tempted every once in a while to jump back in, or are you really content with what you're doing with
You know, Michael, you're the
with
first
them.
person who's ever asked me that. The answer
Yeah.
is no.
No.
You know what? A couple of years ago, I was with one of our founders, and he looked at me and said, "You know, Adrian, I could never do what you do." And I said, "Why?" He's like, I'm so focused on a market and a product and a solution. You're looking at everything. You're looking at 10 to 15 companies all at once.
Right.
And my view of it is, I wish I had done this sooner. Because for me, one of the hard things is when, as being the founder, you're down here looking at trying to fix something and build something. I like being up here because I'm able to see a holistic view and put founders and companies and investors together. It is actually the thing that I enjoy the most about this
And you
process.
need to wake up every day and love what
Yeah,
you're doing.
absolutely.
So
And this is what I love doing because I get to be from this 10,000, level view of looking at markets and then helping my founders to say, "Hey, this is coming up," but more importantly, finding connections.
yeah,
Because that's one of the things that I enjoyed about being the founder. So as a founder, I was the company CTO,
yeah. So you were
and
solving all the
I
problems
was
and the
always solving
issues
the
and
problems.
every hat.
And
And,
someone asked me, "Hey, what do you do?" And I said, "My job is to unblock people. My role is to help others find the things that they can do to get things done."
and you have to realize how blessed you are because so many people don't have that where they wake up every day and absolutely love what they're doing. So for some of the individuals that are listening to this podcast, they may say, yeah, I had my exit. Um, I love the idea of I've got some money. I love the idea of investing in other funds. Can you kind of walk me through like a day in the life of what you do and what it means to be doing venture capital? What is it?
Yeah, I like to split up my day into three parts. And this is very unique to us. And I'll talk about what's unique to us and what's unique to the industry. So, a third of what I do every day is fundraising. And it is not just fundraising for our funds, but also helping other founders are in our portfolio, helping with that fundraising, whether it's making introductions, whether it's being a reference for them, or finding new people in the ecosystem to connect to them that are looking to invest in these spaces. The second portion of what I do is portfolio support. It is working with them on a daily basis from go-to-market strategy, from, helping find customers, helping find acquirers, helping find talent for them. That's fairly unique to us. We're really involved in what these companies, we're really involved in, helping them find, the right customer or a new customer, leveraging our, LP network. Michael, you refer to your, the customers that use the consultants in Software Aces as your expert network. This
Right.
is what we call our expert network is our investors. We bring in these individuals who want to be hands-on, who have 20, 30 years of experience, and leverage them to help connect them to these
And
founders.
it's very gratifying. I mean, I think a lot of what we're doing is very similar in that a lot of the organizations that are on the platform are finding solutions to the different tech challenges that they have in their business, and they're connecting to the right experts on the
It's
platform.
being
So
a
I see,
matchmaker.
yeah, I mean, I see a lot of things go from challenging to successful, every day, and the number of different projects and opportunities and engagements that happen within the community. And it's a community. There are two parts to the community, and it is just the top consultants that are based in the U.S. that are. It's not your PwCs, and your Accentures, and your Coopers, but it's small to mid-size consulting companies, which are really the fabric of America. And these are organizations that are just diving in deep and working on a lot of the solutions with these businesses. And the businesses themselves are small to mid-sized businesses that have all the same types of challenges that larger organizations have, but they may or may not have the talent in-house to be able to solve a lot of these challenges. And it's very gratifying. It's fun waking up every day and helping the two sides find each other.
Yeah,
So
because entrepreneurs isn't a straight line. It's very squiggly.
It absolutely
Um,
is.
and so then I go back to the third portion of my job, which is very typical, is just finding new talent. We have an incredible MBA fellowship program. So this semester we have 2 Babson fellows, and they spend their weeks not just supporting the portfolio, working on investment memos, but they're looking at 10 to 20 deals a week. Founders from all across the globe that are reaching out. I got, I'll use a good example. Like founders are, reaching out to us on LinkedIn, on Instagram, chasing me down off a flight,
Yeah.
dropping their decks off. It's really about finding incredible talent regardless of where it is. And that's the key of what we do. Where a lot of traditional funds invest, locally, we invest nationally because we're looking for the best talent regardless of where it is.
So, what is the hardest part of what you're doing?
Yeah, the hardest part is, one, I think some may say that in this economy, in a capital constrained economy, it's finding the dollars to support them. I think the hardest part is making sure that you can make the right intros to the right people.
Right.
Very much going back to our matchmaking thing. It's, the best advice I ever got when I raised money
Mhm.
from someone. He actually took us out. This is a mentor. He took us out to dinner and said, "Hey, you guys are gonna raise money, and you guys have successfully raised money. So I'm gonna give you 2 pieces of advice. The first piece of advice is people are gonna come out of when you raise money, people come out of the woodwork. And I've seen this happen before." And he said, and that was good. He's like, "Okay, good lesson learned." The second advice, he said, if something or someone doesn't work out in the business, change it fast.
Yes.
And that was really good advice because he was right on the money. That's the hardest thing as being both founder and VC is helping our companies to, one, do that matchmaking like you're doing, finding the right talent to the right, time. Because the advice I tell founders, the talent you have now at 5 people is not going to be the talent you have at 200. So you've got to make sure that you as a founder and CEO are flexible at finding the right talent, but also making sure that you can change it out if need be to either talent that can scale with you. Um, and that's really critical because that goes back to the advice of, hey, you know, if it doesn't work, which is the second part, is if you have a teammate or a product or a solution that doesn't work for you, trying to shoehorn it in is where things break. It's making sure that that software, that team, that vendor, that consultant is perfect for the scale and the place where you are.
And what's really interesting, and the platform is very old school in the way it operates. It's interesting in that we actually everything starts with a conversation with the client to understand what kind of challenges they have that they're trying to solve. And what we do is we'll connect each company with 4 different expert consulting companies to have an initial conversation to understand if they're all good. Any of the 4 companies can get the work done, but which of the organizations, after speaking to 3 or 4 or 5 different organizations from the community, do you feel aligned with and can you work with, and do you really want to invite inside your organization? And I think that's the most important part to any new relationship anywhere in life, is
And
making sure it's the right fit.
and it's a personal process.
Absolutely.
You've got to get to know that the people that you are working with and those consultant and those experts match up with you. Because at the end of the day, you're right. Like there can be 5, 6, 10 people that can do it. It's the ones that gel with you personally, but also the ones that fill the gaps and the blind spots to a company and a team. Because that's what we look for when you're looking for a really good founder and a team. It's, do they look exactly the same and are they thinking exactly the same? Or have they built a team that is filling the blind spots with everything from advisors, investors, experts, consultants to help them build the business as fast as possible.
Yeah, and the interesting thing, we've done the hard work of verifying and vetting all of these experts that are on the platform. So they're all great. But the reality of it is the only one that can decide if they're the right consultant for your organization is you. So I think
Can't agree more.
yeah, that's a big part that we can't solve for. So it's really an important, and it's a very structured process, but it's important to take the time and go through the steps and to figure it out. So on your end of it, so it sounds like you've focused on a handful of verticals that you feel like you're adding the most value to. Um, are there different factors that you find that are really important to these different businesses that you're working with that you see, you know, impacting their success or not success in terms of growing their organizations?
Well, I think it goes back to having that person who has worked the problem before, has seen it, that has the domain expertise, that is able to then, when they're going out to selling to customers, can relate to what their pains are.
Right,
Because the customer has something that is on fire, needs fixed, and that's why they're going to buy software. That's why they're going to buy a team. But also starting to be, going back to that idea of bootstrapping, like, what is it that the customer is looking for? Are they looking for software? Are they looking for professional services? Are they looking for advisory services? To make sure that you're solving it, because the worst thing is to sell a piece of software that nobody uses. We see this in HR sales, we see this in B2B sales. You sell into the organization, and we had this happen to too in our startup. We sold into a big brand, no one used it. And we're like, is this successful? Or did it die on the operating room table? Like in our case, we sold to a big brand and it got stuck in the backlog. They
right,
never integrated it. We had a contract, they were paying, and I'm like, well, all right, it's great that they're paying, but they're not integrated into their website and mobile app. Was it successful? No. I mean, yes, we got revenue from it, but at the same time, if you don't have hands on keyboard, then it doesn't work out. And that's really where we push a lot of our brands to be those experts, but also make sure that's the real relatability, because if not, you have what we've talked about is churn. The worst thing you can do is you have customer churn on something that, you spent 1 to 2 years closing,
yes,
and then they churn like 6 months or a year later.
yeah, and that's not a great starting point. And I think with a lot of B2B solutions, if they're done correctly and they're well integrated into the new organization, it's something they're not going anywhere. It's adding value to their day-to-day operation, and you're gonna have to pry it out of their hands. But obviously, in the B2C space, it's very different,
Yeah.
and churn is a lot higher. So, we touched a little bit on AI, but just obviously, if we didn't dig a little deeper, I think people would be disappointed. From where I sit, I've seen probably one of the most successful uses of AI is exactly the opposite of what most people think of when they think of AI. Most people think of, writing and social media posting and blog article writing and things like that. But I've seen the impact of AI on analyzing massive sets of data as one of the most important contributions. And I know that, identity detection and fraud and security and all of that ties right into that. So how do you see that all coming together in terms
Yeah,
of AI?
that's a good sort of entryway into starting to talk about what we've done right now. Um, we are one of our first exits of our portfolio was in an identity access management company. And so there we learned a lot about sort of in cybersecurity in the last 3 years, there's a lot of money that's gone into investing in identity. And one of the things that we saw is when you take a step back at the industry, the number one job that's unfulfilled is a cybersecurity risk analyst. You could crank out 400 people doing this job, you'd hire them all, but there isn't that availability right now. So where is AI going to help is it's fulfilling that part of the job Where right now an individual is going through hundreds to thousands to millions of rows of attack vector data, of phishing attacks, data all about, trying to not get to that event where someone gets hacked. Um, and so that's going to allow you to sift through millions to millions of rows of data. And so we're investors in a company called Fiverity that's now in what's called the enhanced KYC space. They started as identity, and they realized that in order to look at fraudulent identities, it wasn't looking at one data source. You'd have to look at 10 to 12. And so what they started looking is using their own algorithms that are looking at all this data source, but not just at an identity once they're in, but at the point of entry. Because, when you look at e-commerce, early on e-commerce, one of the things I learned that entry into, of you looking at sort of creation accounts is where the majority of fraud happens, or
Right,
fake data.
right,
In the insurance side, something like crazy, like 20 or 30% of accounts created was fraud because people were entering fake data to see what a claim would look like.
right.
And so when you look at that and you're looking at the creation of an account from financial services, from the insurance, from fintechs, from cybersecurity, there needs to be not just the at account opening, but constant monitoring of whether or not that identity
Yeah,
is
and to really
fraudulent.
peel back the onion to say,
Exactly.
is this just behavior that makes sense
Because
versus behavior that's fraudulent?
exactly, because right now, current fraud detection is based on transaction level data. So, good example, if you bought $200 worth of gas because Michael bought a boat last week, it would detect it as fraud and shut down your account because it would say, oh, you never spend $200 of gas, but today you happen to buy a boat. It doesn't know that. And so it would shut you down. But at that point, you're already a customer and it's already been fraudulent data. So you've got to bring it in at account opening. You've got to do it on a regular basis because what's happened on the going back to the identity space, there has been a push in doing things like orchestration that take an identity and then sort of move it to all applications, all other parts of the business. But if that identity is fraudulent, then all of a sudden you're sending that fraudulent identity everywhere,
Yeah, and
into management, into risk, into governance.
I think what a lot of people they might not realize, obviously your email, your mobile phone number, for this generation, that's like your social security number for a previous generation. But it's only one portion of your digital footprint that's out there in the whole ecosystem. And I think I shared with you that I had owned an e-commerce retailer, which we just sold last year, but that business actually processed thousands of orders, monthly that were substantial orders, real inventory that we were shipping out of our warehouse. And at the end of the day, we had, individuals reviewing orders for fraud manually. And from the moment that we implemented, which at the time was machine learning, is now AI, into the whole process, the efficiency in terms of not having to have manual checks on these orders and being able to increase the acceptance rate of orders that were false positives. If you look
Right.
at a lot of orders that were legit that were rejected because we didn't have enough data, or rejecting orders that looked good but were genuinely fraudulent. And being able to use AI in that scenario is just game changing.
Well, it takes that person out of the loop. You're still going to have the human in the loop.
Right.
Is someone like yourself that's looking at it and sampling and saying, but also beginning to look at, like, why was it approved? Why wasn't it approved? And that's the key of that piece of it, is that checklist of, does it validate and why? And that's kind of the next piece of what's coming in AI, is that approval process of, from a compliance standpoint of, why did the order get approved? Why was it not approved? What were the risk factors that took, and the explanation? The explainability is still very much new to generative AI. Why did it give you this word? Why did it give you that word? Why is it giving you this image versus giving you that image? I think we're almost there, but that's going to be, it's what happened in the ad tech world. Why was I given the ad? Now you're, looking at things, which is why is it sponsored or not sponsored, but also being able to detect of, was this personalized or was this not personalized?
Right.
That's what's coming to AI next.
And I think, it's absolutely interesting. And I think, yes, for those that are concerned, it will replace certain positions. But I think it will also create new higher level opportunities for individuals as well. So I think it's just any other inflection point in technology or in, a paradigm shift. I mean, think of life before the internet, that was a very different world for a lot of people, and we're all still here.
Yeah,
So,
absolutely.
so it worked out. And I guess the other question. So, as you're working with different organizations, are there different one area, a lot of companies, like I told you that we were bootstrapped. A lot of companies may be saying to themselves, they may be listening to this podcast, they may be saying, hey, which way do I go? Should I bootstrap? Should I take on some funding? How do you pull that apart? What would you advise to different founders that are underway and getting started?
That advice is really, there is no one size solution fits all. We talked about making sure that you go as far as you can without taking funding. The reality is there are some businesses that you can do it on. But there's also, if you have a hardware business, if you're in biotech or you're in pharma, you need to have significant amount of capital or capital expenditures.
Right.
It's why we don't invest in those spaces,
Yeah.
because it requires a lot of heavy
Endless amounts of,
capital.
yeah.
It's why we don't invest in, a lot of consumer brands, because you're holding an inventory. And that's the key of it, is making sure that as you look at that founder and they're building the business, that they have a plan for the capital that they need. You don't want to underraise, you don't want to overraise, but you want to be able to bring in outside investors at the right time that's going to help you scale the business. Traditionally, venture capital should be early growth capital. It should be used to put fuel on the fire. And that's kind of, I think, what a lot of founders have forgotten, is that they think, oh, it's just seed capital, I'm going to use it to start the business. If the business needs to run without capital, if your business is dependent on outside capital, then there isn't a business there. It
Right.
should really be there to put fuel on the fire to get you from
So to
500K.
scale what you've already got
Exactly.
working.
Because it should take your million in revenue and take you to 5 to 10 million and 20 million in revenue.
Right.
That's the power of venture capital returns.
Makes a lot of sense. And just I know this is an interesting question, but do you have any stories you can share about your favorite successes over the years, or
You know what?
anything?
Frank Lloyd Wright was once asked, "What's your favorite building?" And he said, "My next one."
I love it.
For me, it's, I get up every morning to find incredible, amazing talent that we have in our portfolio, and that talent that's coming to us to help them grow. And that's, for us, what we do best here, is working with our founders, but also finding that next generation, that next idea, the next great company that we can help grow together. Because that's really is, though we've sold companies before, though we've helped grow amazing companies, it's about building an ecosystem of founders and funders that can come together to help build the next great company, the next great team, the next great software product.
Fantastic. Well, I really appreciate your time on the Software Spotlight today.
And thanks
Adrian
for
Mendoza.
coming to Mendoza Ventures today.
Mendoza Ventures, great. I really appreciate it. Thank you.
Thank you to Andres.